Apple is right on the 0.618 retracement of Fibonacci right here, which characteristically acts as a very strong support level. You can see right here, we did test it throughout the past couple of days so far. It did have a little bit of an upward trend during after hours today. And the reason I bring this up to you is because if you look over at SPY and draw a simple Fibonacci retracement here, you can see that when we touched the 0.618 retracement for the first time around this range on SPY, we actually had a sizable jump in price from up here. We did end up going lower eventually in the future. Also, funny enough, you can see here in the 0.5 retracement, that's the exact bottom that we made from 2022. So funny how that works. However, the first time we did hit this, we did have a nice bounce off of it. So that leads the question, will Apple have something similar, or do we have a premature one back all the way in June 15th, June 17th of 2022 when we had this major rally off of around this range? We will find the answer to this question fairly soon because it's kind of do or die for Apple right now. If it does fall below, especially on a weekly close, that can lead for a lot more downside in the future, and this will have a major impact in the general market. If we take a look at the intraday price action from today, it is a bit choppy, and it has been for a while. You can see this price action just been a mess, just sideways, very similar to what we had when we were up here from previous weeks. A lot of sideways price action, which is only good for scalpers if you are a swinger, even long term. It's a little bit more difficult because there's no directional bias at all. However, we have to play with the cards we're dealt, and right now it is a lot of chop. A part of the reason I think we've seen a lot of this chop is because of everyday expiration for SPY options that started, funny enough, on November 11th, right up here, right before we had all of this chop from over here. We had a little bit of a down move, and then again, more chop afterwards. So that's just my thesis behind it. It doesn't have to persist going forward from here. However, it's funny how we have seen a lot of chop after those everyday 0-day to expiration contracts were in the market, because the market maker makes profit off of spreads. And if a lot of retail are playing 0-day to expiration contracts to trade intraday, then their best interest is not having those contracts expire in the money. So they will end up chopping you out because a lot of people like to pick out the money 0-day to expiration contracts. So that's just my thesis. Doesn't have to be the case, but certainly it's probably a variable, a part of that. If we do look intraday here though today, you can see we are within a pennant formation. We did close above the pennant, as you can see here at 3,852. So that's very key because you could see that we had two major bounces off of it that shows strength off the retest. We had a nice clean break over here in the morning session and then had that retest after the Fed minutes came out. It wasn't anything new to see on the Fed minutes, and then we had a nice 15-minute close to end the day out. So it looks fairly good right now. What bulls want to see is continuation upward. You do not want to see tomorrow a gap down below the pennant. If we go back into the pennant, this makes all of this and this from the previous day a fake breakout. And you guys should know, if you're subscribed to this channel, if we see a fake breakout, then that means the inverse will happen in an even more profound fashion, and therefore we would have a lot more bearish emphasis to come, and that likely would lead to the next down leg, which again, if you guys remember, I am bearish and I expect there to be a next down leg. However, I favor some more upside, like around 3,900 plus, before having the next down leg. It is very common in the market to see short covering rallies that I mentioned in previous videos. Like we saw, if we just look at a simple comparison from the last downtrend, we had a 4-day major squeeze for the short covering rally here before continuing downward. Same exact thing for these 2 days over here. And you can see just previously in the downtrends, you could see back here, FOMC was this day on May 4th, major upward candle that we had, and then it continued with the downtrend afterwards. So it's a very similar price structure on the way down. You tend to see the short covering rallies, and we haven't seen one yet on this downward trend. So I would not be surprised to see something like that before, again, resuming that downward trend. I am by no reason saying we're going to go to the moon, as people like to say, to all-time highs anytime soon. We're doing the complete inverse of when QE was happening. The Fed is performing QT, and that is hurting the market as of now. We will see a lot of the implications, especially in the future, as we continue along with this pace. Additionally, if you look a bit closer here, especially on the hourly chart, you can see we actually have an inverse head and shoulders pattern, which I have mentioned recently in previous videos. And this one's a bit odd because we did have some chop afterwards. Typically, when you see an inverse head and shoulders and then a gap up like this over here, you tend to see continuation straight from that day. So continuation instead of having chop like this. I suspect some of this chop was in preparation for the Fed minutes today. So we should, if this uptrend is to resume, see continuation starting tomorrow. That'd be the most ideal. And I would be very thankful to see that. Even bears would be thankful at this point to see something with directional bias, just because a lot of people are getting chopped out as of now, especially if you have a swing position at the moment. But I would like to see continuation upwards from here. Again, this is only for the near term. I am bearish to the mid and long term, especially Q1, at least end of Q1 to Q2 of 2023. But as of now, this still is a inverse head and shoulders that will apply despite the chop we've had from here. And also, we did break through this downward trend line on the intraday candles for this hourly chart. So that's two major technicals that have been broken to the upside, or at least have bullish emphasis for further upside. Now, again, like I mentioned earlier, if we do get over 3,900, if you look here on the daily chart, this would be sizing up for a perfect head and shoulders pattern before continuing down. You guys know head and shoulders, one of the most common bearish patterns in the market. It's played out a lot in this market so far this year. You can see here we have a left shoulder, a head, and a right shoulder, and this all formed before the major downtrend that started in the middle of August. So head and shoulders are very prevalent in a bear market, and this would be very nice to see a setup like this because risk reward would be very ideal to the downside. Again, very minimal risk, potentially like to 400 or so for risk, with a lot of potential downside to like sub 360. So I would like to see that. And again, technicals are pointing to some more near-term upside. One last thing with SPY, we did see a very unusual order hit the tape during today, and this was after the Fed minutes. We saw a 6.6 million in premium 410 strike for SPY call. This one is 3 months out in terms of expiration, so not too far and also not too close at the same time, but still, this is quite a bit out the money, and this is something we haven't really been seeing as of lately, especially due to the chop we've been looking at so far. Plus, this is a lot of premium, so I definitely am going to be watching this contract. I suggest you guys should as well. It doesn't mean you have to enter it, but interesting to see a bull like this enter, and I will be tracking this to see how it continues. Again, my emphasis is to the bull side, at least in the very short term, so this person could be trying to profit off of that short-term bullishness. Now, do I expect us to get anywhere near 410? No, but you still could be profitable if there was a sudden move, especially in the next couple days, just based on the time that they gave themselves, as well as the strike. Even though it may be a little bit further out the money, they still will be able to be profitable on that. So again, I will be watching this, but what I really want to talk about here, and it's something interesting and a new and emerging concept, is something like Meta. Meta almost filled the gap from the earnings report we saw on October 27th that had a major gap down. And what's interesting is the market has not been the strongest as we've continued upward, which is an interesting scenario that I think we will start seeing in other tickers that begin to bottom before the general market bottoms. So this is a concept that I'm watching as of now. Meta right here, you could see I have a trend line, and if we go to the weekly chart, it was a perfect retest of this trend line. It started all the way down here at this pivot from 2012, literally over a decade ago. Pretty crazy to think that was over a decade ago, but this trend line connects all the way to right around where we ended up bouncing, and it was a very strong bounce. This is definitely going to be a major bottom. Now, is it possible we get under in the future? Yes. However, as of now, it seems fairly likely will happen at least anytime soon, if it even happens for that matter. But so far, it filled the gap to the upside, which shows a lot of strength. And this is a concept that I'm watching for, like I just said, in other tickers such as Tesla. Tesla is selling off very hard, and it's most certainly even harder than the general market. Again, we've been mostly chopping on SPY. Yes, Apple's been falling pretty hard recently, but again, it's not the same as Tesla. Tesla is really tanking as of now. We're seeing a major unraveling of just all of the long positions getting liquidated so far. We saw TD Ameritrade have to prohibit margin buying on Tesla as it continued down. So some pretty interesting concepts. However, something like this tells me that we will likely reach a bottom in Tesla far before we actually see a bottom in SPY, especially if it's the same concept I just showed you in Meta, or at least a major bottom. That's all that I'm looking for. It doesn't have to be a long-term bottom, at least a very major bottom that you could still get a very nice 30% plus bounce off of, because Meta is like 45% from lows. So far, that's an amazing trade by all means. So I'm certainly looking for something like that. I've looked at similar trend lines to kind of what Meta's structure was, and one of the ones that I found that was very interesting is a trend line like this that goes to very similar pivots that Meta had, and this would bring us to around 75 to around 80, just depending on the time that it would hit. Yes, that is still a lot more to go, and also it's been capitulating for a while now. Who knows what earnings is going to be like on January 25th, so I certainly am going to be waiting, but this is something that I may load in Q1 if we do get that around 80 to sub 80 range, and I say that would be a very nice bounce zone on it. Again, not touching it at the moment because of all this downward force, but something to keep your mind open to in the future. Just because SPY isn't or hasn't bottomed anytime soon, or won't probably bottom for Q1 of 2023, doesn't mean that other tickers such as Tesla can't. We've seen with Meta, like I just showed you, it bottomed far before the general market did, and we want to be able to profit on that. One last thing to mention is DXY has found a double bottom so far, and actually actually had a pretty sizable bounce on the daily candle for January 3rd, so yesterday. I am monitoring this because double bottom could lead to some more upside. Don't think we're going to touch near the high of this prior move anytime soon. However, something to note because it can bring additional weakness to the market if it at least has continuation in the immediate term. So I am watching this. No surprise we had a bounce off this level. I already previously had the 103.57 level marked from a prior time. And if you look over here on the weekly chart, you can see, actually, if you look at the entire macro picture, you can see from around the 2000 time period near the dot-com bubble, we had a trend line start from up around this pivot, and we broke out of this trend line for DXY on April 25th, roughly, or at least that week of 2022. So this ended up being the key breakout and also around retest of that level that we had right here. They continued us a lot higher, and I would not be surprised, and I think I mentioned this in a previous video, would not be surprised to see another retest of this trend line. That will be the deciding factor, and I personally think if you look at previous charts like this, there is a possibility of another bounce where we go to new highs on DXY. That characteristically has been the trend, especially if you look at prior CPI data and inflation. You see a major dip in inflation at first, and then, at least in the 70s, this was the case, we saw another even larger rally afterwards. So if we were to mimic something like the 70s around the Volcker time period, then it would make sense to see some form of a retest of this level with a major bounce off of it. So that's something that I'm certainly watching because that will lead to a lot more downside in the markets. Now, we are not anywhere close to it so far. We are certainly getting closer, but at the moment, nothing to worry about, although I would like to just mention that so you can keep it on your radar. Other than that, though, do appreciate you guys watching this video, and I will see you guys next time on Sunday.